Welcome back to the channel, everyone. Today I want to talk about whether Adam Aron and Ryan Cohen are aware of the AMC and GameStop manipulation and if they can do anything to stop the naked shorts. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Memphis tweeted saying, "I'm loving this new narrative that AMC and GameStop aren't doing enough to combat abusive shorting, even though they've mentioned it in every 10Q and have cooperated with the SEC twice." Both AMC and Adam Aron have published numerous times on the AMC website and on Adam Aron's Twitter that they are cooperating with the SEC investigation and can't say anything about synthetic shares. If you look at the specific wording used by AMC and by Adam Aron, it says we have no knowledge of the number of synthetic shares, simply because Adam Aron doesn't actually know how many synthetics are out there. Memphis says that's about as open as they can possibly be on the topic without serious legal issues. Ryan Cohen and Adam Aron know what they're doing. He says we, as each individual ape, are not an individual legal entity with collective voting rights. We individually don't own 10% of the shares. As a collective, yes, retail investors hold 90%, but for example, I personally don't hold 10% of AMC's flow. He says this notion that we can make demands of the board is ridiculous. Ryan Cohen and Adam Aron have both ousted every Wall Street insider, and now we've got folks wanting us to harass the board because of no specific action being taken. He says if you trust in Ryan Cohen and Adam Aron's plan or you don't. I think anyone actually still invested after an entire year would trust them at this point. I think it's important to know that Adam Aron and Ryan Cohen are doing everything that they can. Adam Aron and Ryan Cohen can't just call up Ken Griffin at Citadel and say, "Ken, how many synthetics for AMC have you created today?" Obviously, Ken Griffin isn't going to tell Adam Aron how many synthetics he's created. There's no open two-way communication between them where Ken says, "Adam, I think I created 14 million synthetics today and 20 million yesterday, which adds on to the 60 million synthetics I created last week." Adam Aron obviously then doesn't reply and say, "Oh, Ken, that's absolutely fine. I think in total you've created 1.5 billion synthetics now, is that right? Is there any chance that you can cover a few from last month? Could you cover the 100 million that you created back in December by any chance?" Ken Griffin obviously doesn't openly share the number of synthetics that he's created for both AMC and GameStop. And even if he did, Adam Aron could potentially go to the SEC with this factual information, but the SEC aren't going to do anything. I think it's important to remember that Gary Gensler's hands are tied. Why are they tied? Because of the fact that money buys influence in this country. So Wall Street gets the rules that they want.
It is because there are a lot of things that Wall Street doesn't want, right? I mean, you had Gary Gensler, you interviewed him. And he's like, "Oh, well, I work within the system I can work in." I mean, I think he's, as people atop the SEC go, he's pretty good, but his hands are really, really tied. You know, Jay
So
Clayton.
what's tying his hands? That's interesting. So what's tying his hands?
The fact that money buys influence in this country, and it always has.
Okay.
And so you have, and so Wall Street kind of gets the rules that it wants.
But Spencer.
But I think it's also very important to remember that even if Gary Gensler's hands weren't tied, there still probably isn't very much that Gary Gensler can actually do. All of these synthetic shorts don't actually end up being cleared by the DTCC and the NSCC. They usually go through a process called X-clearing. This post says fail to deliver, more like fail to report. X-clearing needs to be talked about more often. It says that without shares failing to deliver at the NSCC, it appears that regulators like the SEC cannot find fraud in the market. Counterfeits of securities, as in synthetic shares, can bypass the NSCC system and carry out their operation by failing to deliver shares outside of the NSCC systems, commonly referred to as X-clearing, an agreement made between market participants to clear trades with each other rather than at the NSCC. So this is effectively an over-the-counter clearing of trades performed through an ISDA agreement that doesn't necessarily go directly through the DTCC and the NSCC system. It says the SEC does not regulate fails to deliver outside of the NSCC system. Very interestingly, it says the industry has stated that ATSs, or alternative trading systems, and dark pools, or a form of ATS, are a tool for institutions to trade large blocks of shares discreetly and avoid predatory trading strategies designed against institutional traders. However, the data shows that most ATSs have a trade size averaging between only 100 to 200 shares, which is far less or far smaller than an actual block trade. It therefore brings into question the value that ATSs or dark pools add to the marketplace. If the purpose of the ATS is to hide trades from the rest of the market, not disclose legitimate bids or asks, or to internalize trades for the benefit of the dark pool operators as contraparties, then the value of their very existence is debatable. This is because the majority of these even larger block trades are cleared directly between two people through X clearing and don't even go through the NSCC system. And therefore, not only do Adam Aaron and Ryan Cohen not know how many synthetic shares there actually are, because they can't just ask Ken Griffin how many he's created, even if they did know, they can't go to the SEC for help because Gary Gensler's hands are tied, and even if Gary Gensler's hands weren't tied, the majority of these trades don't even clear through the NSCC, and therefore the SEC does not have the oversight. But I do think it's also very important to state that Ryan Cohen and Adam Aaron are absolutely aware of what's going on, and they do have a plan. Guys, if you didn't already know, Moomoo and Futu have just officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Right now, if you sign up to Moomoo, you can currently get 5 free shares valued up to $3,500 each, and a guaranteed free share worth $20 on top of that, just for signing up using the link in the description below and making your first deposit. Moomoo is a brilliant commission-free trading platform that has tons of technical indicators and advanced charting tools. Moomoo publishes daily short-selling data, position cost distribution, and much, much more. Moomoo is also incredibly easy to use and will help you to trade like a pro. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free shares. Yesterday, Ryan Cohen tweeted saying short sellers are the dumb stormtroopers of the investing galaxy. And interestingly, the Overstock CEO, Patrick Byrne, names Steve Cohen and Mike Milken as Sith Lords. The post says until now, Overstock CEO Patrick Byrne had only alluded to the Sith Lords he claimed are at the centre of the web of hedge funds and financial journalists that are destroying companies through rumour mongering and naked short selling. And therefore, clearly Ryan Cohen is absolutely aware of this web of hedge funds and financial journalists attempting to destroy companies, just like GameStop and AMC. As GME Infinity says, I see people tweeting to Ryan Cohen saying to do something. I promise he sees exactly what's going on and he has a plan. Let the man do his job. I think it's very important to remember that in this play, we aren't the ones that are currently losing. Yes, AMC is falling in price, but apes are making their stand and aren't leaving. Short sellers are also making their stand and trying to do everything they can to force the apes to leave so they can cover their shorts, but it's not working for them. I think it's important to remember that both AMC and GameStop are stocks that are still incredibly volatile. We saw the other day with Bed Bath & Beyond where Ryan Cohen purchased a few shares and the stock shot up 60% overnight. I think at this point literally a single tweet from Roaring Kitty would break the internet and it would cause AMC and GameStop to be up 100% or even 200% overnight. I think it's very important to realise just how incredibly volatile that makes AMC and GameStop. That's the equivalent of one tweet from Elon Musk, which causes the price of Tesla to go from $850 per share to over $2,000 per share from one singular tweet. Now yes, a tweet from Elon Musk could cause Tesla to jump 5 or 10%, but it could not cause Tesla to jump 100 or 200% overnight from one singular tweet, just like what could happen with AMC and GameStop. I think it's very important to realise just how stuck the hedge funds are between a rock and a hard place. They can either push the price of AMC up, hoping that apes sell their shares and take their profits. Alternatively, they could also try and push AMC down, hoping that apes paper hand, but it also exposes them to apes buying tons and tons of additional shares. Hang Loose said, imagine if AMC was $10 or even down at $5 once again. 4 million individual apes would only need to spend $500 to buy an extra 100 shares. 4 million apes buying 100 shares each would be an additional 400 million shares, which would only effectively cost us $500 per ape. Now, if each ape ended up spending $1,000, we could collectively buy an extra 800 million shares if the hedgies push the price of AMC down to $5 per share. Hanglu says, could they risk having us do that and buying all those shares? He says, I guess only time will tell as this game of chicken plays itself out. Now, some of you may say, yes, Tom, the apes may buy an extra 800 million shares if the hedgies push us down to $5 per share, but can't the hedgies just cover their shorts when they're down at $5 per share? While I think, yes, their original shorts from $10 a share back from 2017 may be in profit and they could cover those old original shorts, don't forget they've created hundreds of millions, potentially even billions of new short positions over the last 12 months. And again, when these shorts cover these hundreds of millions or potentially billions of new short positions, it will cause the price of AMC to skyrocket because these shorts would have to buy back potentially billions and billions of shares. If a hedge fund turned around and purchased 1 billion AMC shares on the open market to cover their short position, they'd end up buying all of the shares currently available for sale, pushing the price of AMC way past $70 and causing the short squeeze. And this is why the shorts are stuck between a rock and a hard place. They can't push the price of AMC down and cover their shorts because it would cause the squeeze. They can't really push the price up because again, that could cause the squeeze as well. To show just how screwed the shorts currently are, they've had to beg JP Morgan to create them a product that actually protects them from retail investors. The article says JP Morgan is testing a product to guard big ticket clients from losses linked to the meme stock phenomenon that has captivated Wall Street this year. It is around 30 asset managers and quant fund managers have been trying out the Through the Retail Lens product since September of 2021. It's a response to the surprise that hammered investment professionals in January when day traders rushed in to buy stocks, sending the share price of firms including GameStop and AMC soaring. Therefore, since September, these large hedge funds have been using a product designed specifically to protect them from retail investors just to survive. This shows how absolutely screwed the shorts currently are and shows that we are absolutely winning. We just need to continue holding our ground and wait for Adam Aron and Ryan Cohen's plans to pay off. Guys, be sure to let me know down in the comments below whether you think that Adam Aron and Ryan Cohen can stop synthetic shorting and whether you think they know just how many synthetics are really out there. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.